Well, President Trump told NBC News this weekend that he had no desire to repair his relationship with Tesla CEO Elon Musk after the two exchanged heated blows on social media last week. Two Wall Street firms downgraded shares of the EV maker Monday after the stock fell more than 14% in the past week. Our next guest is a longtime Tesla bear with a sell rating and a $170 price target on the stock. Jewsikow, Guggenheim Securities Automotive Equity Research Director, joins us now. Ron, good to see you here with us this morning. So, just take us into first your thinking as the spat was playing out via social media and Twitter fingers essentially were prevailing. But how much of this is an overhang to Tesla as an operation and as a manufacturer of vehicles?
Yeah, it's a good question, and thanks for having me. I would say our basis for the stock has had very little to do with politics since Trump was elected or before Trump was elected. But the stock has clearly been sensitive to political headlines. The stock rallied almost 100% post-election on this view that Trump would help deregulate autonomous vehicles and kind of clear a path for Tesla's Robotaxi plans. We always thought that was a bit dubious. I think that states and local municipalities were always going to have a role to play in autonomous regulation. They do today and they will in the future. But there was clearly a bid in the stock on Tesla being tethered to Trump, and we saw a lot of that unwind last week. For us, it doesn't change anything. We have not ascribed any value to any kind of political outcomes here, but it is certainly creating a lot of noise in the stock.
So what are those fundamental drivers, Ron, that you would want investors to perhaps refocus on to have good investor hygiene with regards to this name?
Yeah, it's a good question. For us, we focus quite a bit on the vehicle business, the energy business, and the potential robotaxi business. I think there's no denying that the robotaxi opportunity is a large opportunity. We just think it's much further into the future than I think the stock implies. And in the meantime, the energy business is a nice growth driver, but it's nowhere near large enough to justify the current valuation. And the auto business is deteriorating to the point where I'm not sure it's free cash flow positive this year. And data through May looks increasingly weak. There's been no acceleration on the new Model Y. So I think the fundamental drivers of the business as it sits today continue to skew negative. And then the robotaxi launch, we'll see how it goes. But I think the major question for us is when it goes from the planned 10 cars in Austin this month to something much larger and more generalized when this can actually go to multiple states. I know Tesla has pretty ambitious targets. I would say we're generally skeptical.
Ron, you have a couple more firms this morning that have hopped into the bear den as well. You've got Argus downgrading to a hold from buy for Tesla shares. Baird also downgrading Tesla to neutral from outperform. Price target $320 here. And the analysts there saying that essentially the excitement over the upcoming affordable car and robotaxi launch in June, they think that the 24% rise despite a weak quarter versus the S&P 500 13% rise is partly due to that. When you talk about what another mass market affordable car could mean for Tesla, what is the realistic timing that you're baking into your modeling on that?
Yeah, we're still working under the assumptions that Tesla reiterated last quarter, which is a launch at some point in the second quarter. That's for production, not for deliveries, but we're expecting to see something this month. In terms of what we're baking into our model, we do expect it to be margin dilutive. We don't expect it to contribute a ton to net volumes because we think ultimately it's going to cannibalize the Model 3 to some degree. This is, at the end of the day, you are taking the lowest marginal buyer and probably shifting them to this more affordable model. It probably helps a little bit in China, but ultimately they really have no prospects of competing in the large growth buckets of China, which are under 150,000 RMB. And this vehicle, I would be very surprised if the upcoming new models are priced that low in China. I think it's mixed negative at the end of the day, marginally positive for growth.
Yeah, you mentioned China. How much do you think it moves the needle in China, knowing that BYD and some of the other homegrown manufacturers have really started to eat into Tesla share and actually out-deliver?
Yeah, BYD is about a third of the electric vehicle market in China. Tesla's sub 10%. So it's more than eating into the share. Almost all of the growth in China for electric vehicles has come in the under 150,000 RMB price point. Think of that $20,000 US and under. Tesla doesn't have a product there. We don't think they will have a product there. And candidly, competing with BYD is going to be really tough because BYD is more vertically integrated than Tesla in China because they own their battery IP, which is a key differentiator and helps them drive down costs. So I don't see a world where they are able to really grow market share in China ever.
Well, let's talk about one area they are at least hoping to gain market share in, which is via the Robotaxi launch, still remaining on track for June, coming up here this week even. Talk to me about the degree to which you see that as a potential growth area for the stock going forward.
Yeah, it's a great question. I think the Robotaxi is clearly the single biggest positive or negative catalyst over the next 6 to 12 months. Our view is this is going to take quite a bit longer than what we think the stock implies, which we think is basically a full commercialization strategy in the next couple years. But at the end of the day, the Robotaxi is clearly what has gotten investors excited about the stock. I think eventually Tesla has to prove that their generalized approach to autonomy, having the fleet and things like that, can leapfrog existing Robotaxi and ride-sharing platforms. We think that that's going to be a very tall task over the next 12 to 18 months. And if that doesn't happen, and autonomous expectations are pushed to the right, this is going to be a very tough stock, I think, to own on the long side.
Ron, really appreciate you joining us. Thank you.
Thanks for having me.